Banking startup LevelField is aiming to become the first FDIC-insured institution to offer crypto services after acquiring Burling Bank, an FDIC-insured Illinois state-chartered bank providing business and personal banking services. Joining us now with more is Gene Grant. He's the chairman and CEO of LevelField Financial. Gene, welcome to the show. So, guess starting off, what is the significance of this acquisition and what it would mean for the crypto industry?
Well, first, good morning, and great question. We think that when we combine the world of crypto with banking, we can really push forward adoption here in the United States. One of the biggest areas of contention that we hear from everybody who participates in the digital asset industry are the problems associated with moving from fiat to crypto and back and forth. And one of the great things about having an FDIC-insured vehicle is that we can combine both the traditional checking accounts along with all the traditional banking products and services with the ability for customers to buy and sell certain selected digital assets and have them all held within safe custody within that highly regulated vehicle. And we think that's going to be a game changer for adoption here in the United States.
All right. So that's great. But, previously FTX US and Gemini Earn customers felt their assets were safe because those exchanges emphasized connections to being FDIC insured. That ended up not being the case. So what is being protected here? So
I don't think it's fair to talk about FTX in any way other than if you use the words fraud and criminal activity. In my opinion, FTX has nothing to do with crypto and everything to do with, if John Ray's to believe, not even an intelligent fraud, but a fraud from the beginning. Gemini Earn, slightly different situation, but it appears to be a case of Gemini trying to have their cake and eat it too by passing through credit risk to their customers without disclosing the full nature of that credit risk. So these are very, very different circumstances than to have a fully regulated chartered bank offering products and services here in the United States. The great thing about the United States banking industry is that it is a leader globally in the provision of banking products and services because of the regulation. Now, regulation is not simple. There is an overlapping series of regulators here in the United States that scrutinize and ensure that banks stay within the lines and provide that safe, secured net. And that's something that we haven't seen at all in the United States from any provider. So that's why we think that LevelField's purchase of Burling Bank and that integration of both the traditional banking world and the new digital asset world will be a game changer.
All right. Well, just in Gemini's case, those deposits that they said were FDIC insured, they were deposits to outside banks. Those were insured and not its own products. And in terms of LevelField, if it becomes an FDIC insured bank, cryptocurrency transactions, will those be protected? Since, it's under question whether or not that is the case because crypto is an asset class that remains uninsured. So until that changes, how do you make sure customers understand the difference?
And that's very important for any financial firm getting involved in the space, is to clearly differentiate between insured products and uninsured products. Banks have long offered uninsured products, whether it's foreign exchange or through an affiliate securities. And in every case, the bank must take extraordinary efforts to differentiate between their insured and uninsured products. And that's something that we're going to be very careful to do to make sure that our customers are not mistakenly led to believe that their digital assets, which are being held in safe custody, are covered by FDIC insurance. Those assets will be covered by supplemental private insurance, as they are in many cases with digital asset firms today, but not FDIC. And this is not new to the banking industry. As I said, this is something that they're very much used to and something that we will be doing with Burling Bank when we combine the two to ensure that our customers clearly understand that safety and security comes from dealing with the bank. It comes with dealing with a highly regulated entity that's got layers of supervision, both internally, externally. It comes with good governance, which includes a very engaged board of directors. And on top of that, the supervision of the FDIC, which in itself is not just an insurance company, it's actually a sophisticated regulator that ensures that banks operate within safety and soundness principles. On top of that, the bank does have FDIC insurance for its US dollar deposits. But that whole comprehensive mixture is what provides that safety and security to customers in US chartered banks.
All right, and the acquisition is expected to be finalized toward the end of the year pending regulatory approval. What's the timeline of that approval in your view?
We are working diligently with the regulators, and what we have done is we've tried to ensure that our business plan is simple to understand. It doesn't have any novel elements to it, so that we can move through the regulatory process as quick as possible. Optimistically, we could close in a relatively short period of time, but in this world of incredible scrutiny that comes, and with, unfortunately, the noise from FTX and others, we do anticipate something closer to the end of Q3 or Q4, but we're going to push as quick as possible to work with the regulators to answer all their questions in a very smooth manner, so that we can go through the process without any major bumps.
And finally, Jean, just last week, the U.S. Federal Reserve Board denied Custodia Bank's application for membership, saying its proposed focus, quote, on crypto assets presented significant safety and soundness risks. So this is a different situation, but do you worry about your association with crypto could have an impact on your approval process?
So we've very much been watching what's happening in the markets. We saw the January 3rd announcement from the Federal Reserve, and then we watched the denial of Custodia Bank's membership, and also their application to join the payments gateway. And key to that is Custodia and others, or Custodia in particular, was asking permission to have principal positions, to actually take positions in cryptocurrency. The LevelField bank post-acquisition will never hold any digital assets as principal, which means the bank will not have risk directly to underlying crypto markets. And that is something that the regulators have made very clear is not in accordance with safety and soundness. So no principal positions. We facilitate customer activity. We hold assets in safe custody, which is definitely an activity in the banking space that has been approved. And the Federal Reserve, in their announcement, reaffirmed that custody is an approved service. It's just holding assets as principal that's problematic, and that is not in our business plan. So hopefully we've written the plan in such a way that it's understandable to the regulators, that we're staying within the guidelines that they set up, and that we can speed towards that approval and integration with Burling Bank.
Well, Jean, good luck with your approval process. Thank you for joining our show. That was LevelField Financial CEO Jean Grant.